We are now entering the final phase before the US deadline on Iran. This is not just a geopolitical event. This is a market structure event. Let's be clear on the probabilities. There is currently around a 55% probability of a controlled strike, meaning a targeted military action designed to send a signal without triggering a full-scale conflict. A more aggressive escalation scenario stands at approximately 20%, where multiple targets are hit and Iran responds immediately, increasing the risk of a broader regional conflict. A tactical delay, where no immediate attack follows the deadline but pressure remains extremely high, is around 15%. A real de-escalation scenario is limited to roughly 10%. Unfortunately, this means that the probability of some form of military action is close to 75%. Now let's translate this into market impact. In a controlled strike scenario, oil is expected to move immediately between plus 3% and plus 6%, with potential extensions toward plus 8% if critical infrastructure or transport routes are involved. Gold is likely to react as a safe haven, with an initial move between plus 1.5% and plus 3% equity markets. Particularly the Nasdaq could open lower in the range of minus 1.5% to minus 3%, with the possibility of intraday recovery if the event is perceived as contained. Crypto assets may experience an initial sell-off between minus 3% and minus 8%, followed by a faster stabilization compared to traditional markets. In a more severe escalation scenario, the dynamics change significantly. Oil could move between plus 10% and plus 20% within a very short time frame, especially if the Strait of Hormuz becomes part of the narrative. Gold could extend toward plus 3% to plus 6% or higher. Equities could see a drawdown between minus 3% and minus 6%, with volatility expanding rapidly. Crypto could experience deeper pressure, in the range of minus 8% to minus 15%. If, instead, we see a delay with no immediate strike, the reaction is likely to reverse. Oil could retrace minus 2% to minus 4%. Gold could pull back minus 1% to minus 2%. Equities could stage a relief rally between plus 1.5% and plus 3%, and crypto could rebound between plus 3% and plus 6%. But the key point is not the event itself. The key point is how the market interprets the event. A controlled action leads to stabilization. An uncontrolled escalation leads to systemic risk repricing. The first 1 to 2 hours after the deadline will define the entire structure. Watch oil. Watch gold. Watch the reaction speed in equities. Because in environments like this, markets don't wait for confirmation. They price risk instantly. Let's hope everything will still end in the best possible way.